notice to their customers over the impending changes in interest rates to match the review. Major banks in the country are now charging between 16 to 17% as interest rates on their facilities. Edwin John Mukora weighs in on the expected impact of the interest rate increase on the performance of the industry.
Commercial banks in the country have continued to adjust their interest rates in line with the adjusted base lending rate, with some reportedly asking for a high of 19% as the industry continues to adopt the risk-based lending model.
So we're looking at levels of between 14 to 19%. However, you know, risk-based lending is very dynamic, and it is dependent on the profile of the client, as I alluded to earlier. But I don't think banks can go anywhere above 19% per annum. If you go anywhere above that, you're talking about microfinance banks. Those are the ones who, based on the Microfinance Act, they can actually lend above certain limits.
The central bank lending rate, which stands at 8.25%, was adjusted to this level by the regulator in a bid to mitigate the runaway inflation in the country, which currently stands at 9.2% year on year for the month of September. NCBA Group, Standard Chartered Bank, and Stanbic Bank are some of the banks that have notified their clients that the base rate on their loans will raise from this month. Experts now say that this will lead to a reduced demand for loans, as this current situation comes at a time when the banks are also adopting the risk-based model of lending, giving the banks a leeway to increase their interest rates based on the assessed risk.
Risk-based lending was reintroduced. It simply gave a leeway to banks to actually lend to more people, rather than the previous model whereby the banks felt, rather than lend to the market, let me lend to the government. So it was essentially stifling credit in the market.
This model of lending top-tier commercial banks have recorded high profit margins in the second quarter of the year compared to microfinance and small banks.
If you look at the results, half-year results for banks, actually the top commercial banks have made a lot of money, because it simply means the more you lend, the more you spread your risk, and the more you earn in terms of interest income. So the top banks have actually performed quite well. If you look at KCB, Equity Corp, NCBA, the big boys on the block, so to speak, all of them had made money. Now on the flip side, there are banks which are gradually below them, like Tier 2 banks and microfinance banks. Microfinance banks have not made money simply because for them, their cost of funding is higher. Now, by cost of funding, I simply mean the cost of them getting money. So if you're running a bank, you take money on deposit and you give an interest on the deposit, and then you lend higher than the interest you're paying on the deposit, and then you make the differential. So smaller banks have had to increase their interest rates on deposits, which means their cost of funding is higher, and then lend even higher. So it simply means for them it's a bit more difficult than the commercial banks, which have a bigger capital base, and therefore they can, you know, accommodate more customers. So it's a mixed bag, but the top banks have actually made a lot of money since the reintroduction of risk-based lending.
With central banks in the world adjusting their rates upwards in the face of the current inflation, interest rates will only have to go up. It will be a matter of time before the final impact of these is finally felt in the economy.
Now, if you look globally, in Western and European countries, credit is actually extremely cheap. People borrow to levels of even, in Kenya we talk about 15–16%. In Western countries, people borrow to even levels of 1%. So in emerging markets, Africa, Sub-Saharan Africa, the discussions are normally different because of the economic dynamics which go on in Africa vis-a-vis what goes on in Western countries. So to answer your question, the risk-based lending model is applicable in Africa, but in Kenya is where it's actually taken center stage in recent months.
For now, it is literally a smile all the way to the bank for the big boys in the industry. Edwin John Mukora, Look Up Business.